The historical cost principle is an accounting principle that's very related to the qualitative characteristic of reliability. A definition is that all transactions are recorded at their original cost, or their purchase price, and must be shown in the firm's accounting reports at this historical price at all times. This means that assets aren't revalued to their current market value but are maintained at their original cost. So a question we need to ask is this an appropriate principle for all assets? For example, inventory or stock. Some stock decreases in value over time. For instance, if I have summer swimwear and it's now winter, I'm probably going to have to lower the price of that. So historical cost might not be appropriate. A debtor, well, a debtor's a balance that they owe me. That's something that's probably going to remain constant, so I would probably keep that at its historical cost. Premises, generally in Australia we're fortunate that property prices go up over time, so it doesn't really make sense to not revalue property, and the historical cost principle may not apply. The value of shares, they change every day, and vehicles, again, they go down over time, they depreciate, so we need to consider, is historical cost the most appropriate principle to apply? And art. Let's look at art as an example. So let's take the Mona Lisa, painted by Da Vinci many years ago, bought by the King of France for 4,000 euros, a currency that doesn't exist anymore. And basically in the early 1800s, it went to the Louvre and it's remained there. If we just want to do an equivalency, we've got 4,000 euros is about $190,000 approximately. So using the historical cost principle, the Louvre should record the Mona Lisa as an asset for $190,000. That's the historical cost price. Is that the most relevant? And we spoke about relevance as a qualitative characteristic. Well, it depends. Could you value the Mona Lisa today at $190,000 for insurance purposes, or if you wanted to sell it? Absolutely not. In fact, in 1962, it was valued at the Guinness Book of Records for $100 million as the highest insurance value of any painting in history. And a rough equivalent today is it's worth about $768 million. So I think using the historical cost for something like the Mona Lisa, it is an asset for the Louvre. It doesn't make sense. However, big companies do use historical cost when preparing their reports. This is from Myers Financial Statements. We've got their balance sheet there, and the accompanying note says that these financial statements have been prepared under the historical cost convention. What that means is that all those numbers there have been listed at their historical cost, with the following note. It says the financial assets and liabilities have been measured at their current market value. But otherwise, your cash, your inventory, your trade and other receivables, they have been listed at their historical cost. So historical cost is used today, and it does have its merits, and a lot of transactions are recorded at that original price. Looking at that relationship, there's a definition of historical cost on the left. We want to record things at the price we paid, and therefore we'll have documents. We'll have invoices, receipts, and so on. That actually helps ensure reliability. Reliability says no estimates, no errors. That means that we need to be able to check or verify things, and that means that we need a source document to verify it. So historical cost and reliability go hand in hand, and each supports the other.